Hi everyone, I'm Matt Feddick with the Matt Feddick Real Estate Team at Keller Williams Realty, and I'm excited to share with you my thoughts about what to expect with real estate in 2014. Let me give you just a few brief snapshots of what happened last year. I'm going to look at some of the information we have from the MLS, but it was all, in general, really good news. Here's some quick facts for you that I wanted to share. Real estate is a supply and demand business. The more supply, the less demand, the lower the price. That's been what's been holding us back for the last several years. A lot of supply and therefore less demand and therefore falling prices. Well, here's the great news. We ended up the year with a 5-month supply of homes on the market. That is a balanced market. When you have 0 to 3 months supply, that's a seller's market. 4, 5, and 6 months, you have a balanced market. More than 6 months, you're in a buyer's market. Just to give you an idea, we ended last year, 2012, with just a little over 7 months supply. So we ate away 2 months of supply and got back into a more balanced market. Keep in mind that at the end of 2011, really when things were at the worst, or in the middle of 2011, we had almost a 13-month supply of homes. So in about the last 2 years, we've been able to eat through the supply. So that's the first thing I wanted to tell you. Number 2, pending units. That means the homes that went under contract but didn't settle. Every single month that was basically a positive gain year over year. So in November of 2013, it was a 21% gain over November of 2012, and almost every month backwards. So I wanted you to have that information and look at that. Now, settled units in general, the settled units have been higher every month for the year of 2013 than they were for 2012. The only real exception to that was November. November had a few less settled units than November the year before, but overall it's substantially higher. Now, the last thing I want to bring into your attention is the average settled price. The average settled price in our area increased to $305,000. That's up 4% over last year, where last year ended. So we're starting to see an increase in the settled price. And one little piece of information I want to give you too is the list to sale ratio. That is the price that a home eventually sells for compared to the original list. At the worst of the market back in 2010, 2011, we were seeing list to sale ratios that were 89 to 90%, meaning that sellers were having to discount their home about 10% from where they originally listed it in order to get it sold. Well, we ended the year at a 94.5% list to sale ratio, meaning that on average sellers were only coming down about 5% off the original list price. Well, what does that mean? Well, as the #1 real estate agent in the Philadelphia suburbs, Chester County and Delaware County, having sold a little over $53 million just last year alone, this is my insight for you. I think that we are going to see a strong spring market. I think homes that are priced right and staged correctly will sell, and they'll sell quickly. However, the homes that start off overpriced will sit and linger. The buying public is very savvy. They don't want to overpay. They don't want to see another run up in the market. They're not interested in inflated values. So homes that are priced correctly, that are based on recent comparables, stuff that has sold within the last 3 to 6 months, will get sold, and it will sell quickly, especially if the condition matches. Now, if you're wondering what your home is worth, now with the market going up and down and getting a little bit stagnant and now a little bit balanced, please call us. Somebody on my team would be more than happy to give you a quick, free market update value on your home. We'd like to help you with that. So for more information, please contact the #1 real estate team in Chester County, the Matt Feddick team. I look forward to hearing from you soon.